G'day guys, it's Jake here. Nothing in this video is financial advice. Please do your own research when it comes to investing. Please be sure to check out my links below, including exchanges I use and social media content that I post. Alright, let's go. So the topic for this video, we're just going over some of the events for this week on the economic calendar. Also going over Bitcoin search trends on Google Trends and a tweet by a guy that I follow about Bitcoin, and just going over some charts as well to see where we're tracking with the crypto market. So that'll be the video. So nice and short and straight to the point. So this one we got here is the economic calendar, as you might know from my other videos. And you can see these reds are all high impact news. So 3 stars and above. So you got 1, 2, 3 stars. And this is US and Australian data because I'm an Aussie. I like to track what's going on in my own country. But more or less, it's what matters the most is the American economy, right? Because that's the bedrock. They're the world reserve currency. They're the ones to track the most over anyone. So the US is the leader, and especially when it comes to the Fed, and what they have to say and what they do is very, very important to keep track of. So you can see on Thursday at 4 a.m. my time, which will be basically Wednesday's session, there will be FOMC minutes come out, which talks about the previous month and what was said in that meeting, to discuss if there's any clues, any rate cuts coming ahead or not. We don't know, but we have to wait for the FOMC minutes to reveal any intriguing information, anything we didn't know before, or it'll just be pretty stale and, you know, like it usually is. It's not very revealing, want to call it that. Okay, so it's pretty standard. So that comes out on Wednesday night for Americans on Thursday morning. And Wednesday, it's not Wednesday night, it's Wednesday trading session. For me, it's 4 in the morning. Okay, so right towards the end of the session. Okay, Wednesday's, yeah, that makes sense. So the end of the session. Then next Saturday, we're coming up for me. But we've got Fed Chair Powell's speech at the symposium in Jackson Hole in Wyoming, which is quite common. Every year they go there, August. So that is happening. And there's nothing happening this month in terms of any interest rate decisions or anything like that. So it's really guiding what's happening for September, which is what we're all waiting for, whether it be rate cuts or not, and whether he's happy enough with the data that's coming in for the inflation. But it's right before September's meeting, there'll be unemployment numbers come out. So that would be really, really, you know, it'll tell the Fed if it's the right time to cut if that data comes in weak again. So get more weak data and unemployment goes up, then you'll see the next September's meeting, it'll be a rate cut for sure. But right now, it's just going over what's historically, what the trend is, the data he's seeing. Not just the unemployment and inflation, but, you know, the retail, consumer, and the housing market and everything else. So really cover all different topics, but it's the overall economy we'll be talking about that meeting there. And then next week, we've got the GDP numbers, the growth rate for quarter over quarter. And that'd be really interesting to see. 1.4 previously. Will we get lower than expected GDP numbers to conclude that we are in a slowing economy and we're heading in a recession, or we'll get better than expected? So we'll have to wait and see for that one. So that's the data we have coming for the week. Next is Bitcoin search trends. So this is Google Trends I like to look at, see how many people are searching up Bitcoin. And really it's just a ranking system from 0 to 100. So 100's the top, and then you got 0 in the bottom, okay? So you can see this is the yearly chart from worldwide. And you can see from the start of the year, we're at 37, really traded sideways, and we sort of trended a little bit up, and we hit 100, which is the max peak in terms of search trends, which was the top in Bitcoin around early March, and I've been trending down ever since. So we're down to 33, so this mid-level, okay, which is below the 50 level really, and it's back to pretty much a year ago. So not looking good for the search trends. If you want to zoom out a bit more, I like to look at the 5 years, and we are on the downtrend. We just ticked down from you know, we're breaking out to the upside here in terms of search trends at 33. I thought, oh, here we go, on a roll here, and now it's been declining, been to 18 again. So really back to June this year, and then if we go back even further, it's January to February this year, and before that, it's going back to October of last year. So it's on a downtrend in the 5-year, which is not a good sign, and there's not enough retail to get the market going again. So I believe this is another source of, it's another puzzle piece to where the interest is the market, and I don't see mania phase at the end of this year like most people predicting on Twitter. It's just crazy what you see on Twitter. It's just nuts. And then if you want to go and zoom out to 2004 to present, which is pretty much the inception of Bitcoin, and we are over time we are trending up. Okay, but we have had this peak in March, of course, and we've come down since then, and we've had sort of a push up, but nothing to really get anything excited, because that's just, it's pretty much at these levels here, at April 2023 levels. Okay, or back here in December last year. And then if you go back to like a zoom in chart of the 5 years, which I like to see, gives you a better understanding of the sort of mid-term trend of Bitcoin. So it's trending down. This is not good to see. We got a tweet by JT, and he says Bitcoin monthly SMI ergodic indicator. So I made a video about this going back a few videos ago and talk about the SMI indicator, which is this guy here supplied it. He tweeted it. And I thought, okay, what's this indicator? I looked it up on TradingView, found it for free, and it's very, very interesting. And it's basically, it's a TSI with a signal line, okay? It's like a MACD essentially, up and down. It's a little bit different the way it's calculated, but nevertheless, it's basically like a moving average, and it's plotted on an oscillator. So if you want to make it the simplest way possible, it's just two moving averages, really. That's just what defines it. And don't make excuses, make money. Cycles, charts, conviction, and consistency. This is a monthly chart. And you can see this trend line is drawn from pretty much the $10 Bitcoin back in 2012. Okay, as you can see there. And then it came back down to the low in 2014 to 15. Had a top. He touched this trend line again here in the COVID-19 low, which is 2020. And we touched it here and went below it. Okay, we've been below this trend line for quite a while. So this was the first break, which was in 2022. And now we back tested it here. As you can see, the 4.236 Fibonacci retracement. And that was the top. And then we come down. So we haven't managed to break above this trend line. And we're trending down, of course. So that's that. And the SMI indicator, you can see we had this red top, 2013, the post-halving peak, which we usually peaks. Had this bear cross, which is signal line going, so the SMI line going below the signal line. Okay, that's right. SMI line going below the signal line, it's bear cross. SMI line going below the signal line, bear cross. It happened in the 2018, 2017, late 2017 peak in the post-halving year. So every 4 years. And 2021 was a little bit earlier. Supposed to peak which did peak at the end of that year, but we did get this red dot here, which is drawn, and it crossed early in that year, 2021. And it come down, of course, and we diverged and price a little high, and then bam, it dropped off after this the momentum, the SMI keep dropping. And then, if you look at the bullish ones, bullish here, it crossed bullish, and the market went up in 2015. Same here, crossed COVID-19, 2019 low, sorry. There, and then the pandemic low there, which was this one. So higher low, and then it went higher as it crossed above the signal line was the white one, and then the SMI line, the orange, crossed above, and then we went bullish. So bullish, so bearish there, and we had bullish after the FTX in 2022 collapse, and it crossed there, and so it was a signified bullish trend again, but we obviously trended up, and right now we're seeing a bear cross, okay, in 2024. So will this be really bad, or will it be like 2021 where it did trend down, where price did correct, and then make another high after it? might continue to go down. Anything's possible, okay? I don't know exactly what's going to happen, but we could come down a fair wave on the SMA line because we only just crossed. This has only just occurred, and this could be a really big correction for Bitcoin. So just be prepared. It's been pretty accurate, as you see here. So just be wary and don't freak out. If you're already invested, just stick to Bitcoin. Altcoins will not be touching with a 10-foot pole because they'll go down a lot more than Bitcoin. If Bitcoin gets corrected in this upcoming recession that I believe that we're going to head right in towards the US, it will affect Bitcoin's price going down. It will correct a bit, but then the altcoins will go down a lot more. So just don't get into altcoins now. Just hold off until the recession is over or halfway over or whatever you want to call it. But that is the indicator for that one. So on the Bitcoin price on the 3-day time frame, and you can see this is the mid-level here that I've drawn. So you've got the high level of 71.5, okay, which is the top here, top peaks. This top level here and here, you can see. And we had the mid-level, which is the mid-level of this channel, descending channel. So the top and bottom vertical, I should say horizontally diagonal lines. So you get the touch here, okay, you had a touch there, you had a touch here, 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 and we'd be back tested here once we broke it, okay, so we're sort of struggling to get above it. And we have the bottom line, which is the 51,000 level, which we did wick to it the other day. And this is a little bit of accumulation here before shooting upwards, okay, as you can see there. So that is that, those levels. And I'll bring up the bull market support band so you can have a look at where we're at for the moving averages. And this is a 21 weekly EMA, which is a green line. And the red one is the 21 weekly SMA, which is a smooth moved average. It doesn't move as much. Because EMA is a bit more volatile and reacts to price a little bit more. It's exponential and smooth moving averages, okay? So you can see the current levels, 61K the EMA is at, and 64,000 is where the SMA is at. And price did reject from that level and we did sell off a little bit, but then price is still stubborn and it may well break up, okay? It could still break up, or I need to get above this red level first, okay? That's important to see. I'll just get back again. I'll put that back up. Lost it. And I'll draw it like this. So it needs to break above, okay, durably and come back up to the top of this channel. And I do think if we do come up to the top of this channel, we've tested it once, twice, 3, 4. The 5th time, I do think we can break through, okay? That's your left translated cycle. And, you know, we go into the big mania phase by the end of the year. If that doesn't occur, which is what I'm seeing, it won't occur, is we'll reject again, head back down to the bottom, back to 51K, all right, the support line. And ultimately, after some time, we should break it. And then, you know, by the end of the year, I don't know when exactly, but sometime towards the end of the year, I believe 41,000 is going to be hit, okay? So that's this level, the 2022 low, 2023 summer lull. And again, okay, so this is this longer-term macro upward sloping trend line, and I see Bitcoin going down to there because recession fears mainly, okay? If you want to look at another thing that really occurred, I want to compare this against 2019. You got something similar happen, okay? Hey, it's this pink putty thing. Let's make it orange, just for simplicity's sake, because Bitcoin is orange. The interest rates, as you can see, we have zero interest rates, 0.25 essentially, a little bit above zero, and obviously they jacked them up to 5.5 to 5.33 ish is the average, to 5.5 to 5.25, and about to cut. All right, haven't cut yet, and the similar thing happened. Okay, so you had rates at around 0.25 here, and a lot that for a long time, and they jacked them up, and they jacked, and we're at similar levels. Well, this one was actually 2.5 percent there. Anyway, that is that. 250 basis points. All right. 2.5%, and they cut. After the cuts occurred, the Fed saw some panic in the repo market, in the banking sector, which is basically overnight lending between different private banks. And the central bank, the Federal Reserve, stepped in and they had to simulate that market as rates were just skyrocketing, and they had to come in, buy bonds and do what they had to do. So they cut, right, and Bitcoin topped, right, and then just trended down as the rate cuts came. Bitcoin just kept going down. We broke below this bull market support bands, okay? Big red candle, or purple candle, and then we trended down, and then we came back up. We couldn't break. We couldn't close a 3-day candle above the red SMA, okay? And then it just went back down again and made even lower low. And we traded below it, and then we rallied back up and broke this bull market support band because the rates were flat and the Fed thought they solved the issue. And then what happened here was we had the black swan event. We had the pandemic, obviously. And, you know, this happened and rates just got slammed to stimulate the economy. Just panic happened and price obviously dropped like a rock because rates just got slammed, and we fell below the bull market support band there and went down to these lows here. You know, very close to these lows. If you want to mark it out around there-ish, okay. As you can see, at around 3.8 in this cluster of lows, we revisited them, and that was that, okay, after the rate cuts. We haven't had rate cuts yet, but when we do have rate cuts, I do see that being the top, and it's going lower, heading to 41K and potentially even lower than that. In the year, I say 41K definite, but going in 2025, don't know what's going to happen, how bad things are going to get. But we need to get above this bull market support band to really invalidate that thesis. If we struggle to go above it and we just come back down, then yeah, you can definitely see 41K on the horizon. So that is that. When it comes to rate cuts, and they'll cut rates, the Fed will, because they'll see some weakness in the job market. That is my view. It has nothing to do with inflation. Inflation's on track, their target, which is good, but the jobs numbers are going to be really, really telling to see if they're coming weaker than expected for next month, and then, yeah, it's all over. The cuts are coming, and it's not good. And we'll revisit, you know, this time here, you had the pandemic crash, and it did come back, revisit these lows. Will this happen in this cycle and revisit the lows down here at 16,500? I don't think so. That's going to be a really bad event. It's going to be a really, really bad recession to cause that, but I don't see it being that bad. Probably the lowest it will go is probably 30K to mid-30s, and I'll show you why real quick. Okay, so bring Bitcoin at risk and bring up the lower upper bands and turn performance mode off. Bring up the logarithmic and weekly charts. And as you can see there, you know, you go back over history and look at this chart, and which I'll probably show you on the other one. It's a bit more easy to see. And it goes back to 2009 as you want to note that Bitcoin was formed in 2009. And if you ignore all this, when it started to form and this started to rise up, the price did respect it up here, back almost down to the bottom of it, went to the top of it. As you can see, the bottom here didn't close below it in 2015. Went up to here, just closed above it, very barely, in 2017. And then we came back to the pandemic. We didn't close, but we did come back down to it. And we got close to the top there, but not quite. 2022, we touched the bottom. And now we are seeing we're sort of in the middle of it. We're at 37 risk, okay? And this here is risk levels, that's 43K, which is 20 risk. And then at the bottom here is zero risk, essentially zero right in the bottom. So as this rises up with time, all right, this rises up. If you're going to get accurate as possible, going to January next year, you know, it could come in at 35,000, 36,000. It could come down there by the end of the year to hit the zero band. or it could wick down below that, okay, and hit the early 30s, 31, 30, before wicking back up. As you can see, this here, the pandemic wicked and then came back up. All right, in 2015, same idea happened. It wicked and then came back up. And then ignore this noise. This is too early for Bitcoin. So that could play out too, like 2015, 2020, and then go back up again, okay? Then just quickly fake people out and back up, and then off to the races from there in 2025. Eventually, we'll see how long this takes to recover from the recession, but nevertheless, this could play out, okay? And I don't see things getting as bad as that. It's 36,000. So here's the risk levels. I'll just turn all this off. So that is that. And we'll move on to some other charts as well to see what's happening. So Ethereum, have a quick look at, and you can see you got this wedge, okay, respected it, up, down, and we broke through. We came up, formed this support line, up, touched it again and bounced again. So 2 bounces is a form of a support. And then we're breaking this support line. All right, the weekly touched right down to here, just below 2,000, which is this here, this high, this sort of cluster here, and these levels here going back to 2021, which was formed back then. And it's a nice round number, 2,000. You know, everyone's, you know, you can see it's quite obvious. It's where the big boys will see these sort of levels, and they'll target these levels to buy from or sell from. Okay. Anyway, that is that. I do see it's coming down to it, and then after, you know, the Fed cut rates is what really will give me the indication that will, after that fake rate cuts, price should break this 2,000 level. All right. So I'm just, yeah, that's what I'm seeing. I'm not sorry for it. You know, trying to be bullish. Well, how can you be bullish when you see job numbers incoming week, and then month over month over month, they revise the numbers lower and lower and lower, just so they look, you know, so they beat estimates and make themselves look good. But at the end of the day, job numbers aren't looking very strong, and the unemployment rate's rising. The SARM rule's been triggered, which indicates recession. Recession's not good. Okay, price is going to come down, and it's just a matter of time. What triggers it? This pretty much the rate cut will trigger it. It'll be the Fed cutting in response to weakness in the economy. Okay, and that's he's not bullish. He's not bullish at all. So I'll show you back in 2019. You know, so after they started raising rates all the way up here, 2.5, and you can see this wedge pattern here, right? Draw it on the logarithmic chart, same sort of thing. So we went down, so up, down, up, broke this wedge, came up. We had it before the first rate cut. We came down, all right, and the rate cut happened. We came down to this support level, okay, which is this resistance, and we touched it. Then eventually, a couple of weeks later, we broke, okay, broke down, just bleeded down, all right, ETH just bleeded down after the rate cuts come, and it rallied back up as the rates, I thought it was over. Then we had the pandemic, and then they slam rates down, okay, big cuts, and then obviously price got destroyed to the downside, and we came back to these lows. The week was right down here, so pretty much all the way down here at $85, $86, or $90, I should say. It's the week low to this level. So ETH did revisit the lows after the rate cuts, all right? When the rate cuts come, I expect price to come back down to this $2,000 level. And then when the rate cut happened, eventually it'll sort of stagger, and then bam, it'll break. And then the first target would be 1,500, which is here, as you can see, nice and clearly, which is the support level. Okay, touch. If I bring it back even more, you can see, you know, probably about there, roughly. There's a cluster there, a cluster here, and we come back here, and it's a nice even round number, 1,500. And then, bam, I do see us revisiting the lows, okay? At the depths of this recession, $1,000, which we did here. We did this section here. We did come back down to the lows, as if we have a hard landing. A really hard landing is what a lot of economists call it. We had a softer landing, and the Fed achieved their goal of cutting rates without a recession. This occurred here, and it rallied back up, and that would have been the start of the next bull run. But we had this drop, of course, which is the pandemic, which was a recession. So this didn't happen. This would have been the lows, and we wouldn't have revisited these lows. But of course we did. Slammed down to it, and I do see it playing out. If it's a hard landing, which I do see it being a hard landing, unfortunately. And we had a wedge here. Okay, we went up and down. It sort of broke above it, and we came back into it, and we broke. As soon as he broke this wedge, okay, we visited these lows, which is this pullback here at $7, and we came back and retested it. After we tested these lows, we took up to the upside, and the bull market commenced after the halving year, and then kaboom, blow off top. All right, so quite similar. You got the wedge, you got the breakdown, support, same thing. You know, the wedge, breakout, so a little bit of breakout there. Came back down, and we came back down to this level. And I see the same thing playing out. Just obviously a lot bigger wedge. And it's taken a lot longer time to play out, and it's been very frustrating. I want this to happen sooner than anticipated, but you got to deal with what the market gives you. So basically, take what the market gives you. It hasn't given us a sign yet. Once the Fed cuts rates, and then I do see it's visiting $1,000. All right, it's Ethereum. And then, you got other charts I can just skim over real quick. Here's, this is the same thing. Breakdown the 1 month before the rate cut. It's this line here, which occurred back in 2019. So on the weekly here, but this is 1 month before the cut. We closed the weekly candle below this level, okay, support level. And the cut came, and then we just went lower after that point. This is total 3 against Bitcoin. Get rid of USDT. And that is the calculation. So alts versus Bitcoin, essentially. And we're getting, we're pretty much below this support level now. So we've been below it since June. And we should see a close durably 1 month before the cut. If you go on the monthly to really demonstrate this point. And there's your monthly close, right? Your monthly candle is a close below this support. Okay, so it's nice and clear. And then the rate cut came there, which is this next candle, and we closed again even lower, more bearish. And we're seeing this monthly candle. Okay, this one did technically close below these lows. All right. And you got this one here, which is forming, and it's definitely below support, and we should see it close bearish. And then head to this bottom level of 0.25, which was this level, this big deviation there, of course. And then we should come back down and retest it again. So this is 25% of Bitcoin's market cap. And I should see hitting the bottom of that level there, which will really give you the best opportunities to buy altcoins. All right, down the bottom here. And when we start to bounce off that, that's when you start looking at buying altcoins. That's the best ultimate time. So when QE started, okay, we found a bottom and we rose up. We did have a fake out deviation down the bottom. If you ignore that, that was the bottom. QE, anytime in QE is when you're only buying altcoins, all right? Not in QT. See, they bleed. So they just go down against Bitcoin. QE, they go up. QT, they've been going down. So don't buy them in QT, buy them in QE. All right, when the Fed, their balance sheet, and there's a balance sheet here, okay, then purple. And when that starts to tick up, as you can see, down periods are bad. If it's flat, sideways, that's good. And you see this shoots up, it's good for alts. And it's bad when it goes down. All right, that's that one. Similar with others, Bitcoin. Okay, similar idea. When it goes down, it's bearish for others versus Bitcoin. So others are outside the top 10. And if it goes up, obviously it outperforms Bitcoin. And it's common sense. It just follows this, as you can see there. And then when it goes sideways, I'll give you more perspective. Take it off logarithmic. What was this one? Sorry. There we go. And it does go up in QE, and then QT happens. Bam, goes down. All right. QE up, QT down. And you can see this pattern's quite similar. We have a 67% drop and made a low from this very high point to the bottom. We pumped 65%, and then we dropped 62%. And we came back to these lows, okay, this cluster here, and we came back again from this break, just push up and push down. Similar thing happens here, 68% drop from the top, makes a low, pump 69%, 65%, 69%, then it comes down 70. I'm predicting 70% to come back down these lows, okay? So quite similar to these. This move here is quite similar to this move. It's looks a bit bigger than this one, but it definitely could play out as well. All right, so that's what I'm seeing for others versus Bitcoin, and 0.08 of Bitcoin's market cap. Okay, so 8% of Bitcoin's market cap we made up of others outside the top 10. Then you got ETH Bitcoin. Okay, so same thing. Goes up in QE, goes down in QT, goes up in QE, goes down in QT. And this is ETH versus Bitcoin, of course. And you have this trend line here forming from January or December 2015. And it rises up, touches it there, and I do see it touching again. And this one didn't quite touch though. This is a bit of a outlier, but anyway, I'm going historically from this touch to this touch, and it's sort of it's a rough guide, and it lines up with my box where I've drawn it, and it lines up with the box, an upwards trend line. It gives you extra confluence that it can reach that level. And we can see this little wick here, we actually touch the top of the box. I want us to see is down durably to this lower blue 28% drop from this support level, as you can see there. And we had some support, these closes above on the monthly, and then a drop down to the bottom at 0.035, and we've got 0.04 of a Bitcoin. Okay, 1 ETH, and we had 53% drop from this support. Our support here, we had a 38% drop. Okay, as you can see there. And then the bottom was QE, and it shot up. The top was QT, shot down. So this the bottom was QE, but it goes back further, shot up, and the top was QT. Pretty much, it's a lower high, but it was the start of the aggressive down move. So 53%, 38%, and I see a diminishing return. So 28%, which is lower than these two, and it's a fair target down the bottom, and obviously adjacent with this trend line. What I see for that one. Then lastly, we'll talk about Sol ETH. Okay, so you got top of the range, tops is 0.058, so Solana versus Ethereum, and at the bottom of the range is 0.007. Okay, so I do see it's revisiting at least 0.015 level. I see it's going down to here, which is quite an aggressive drop. Solana versus Ethereum, which we bring down a lot of the altcoins as well, and be pretty aggressive and brutal. So we're at the top of this range, so not be buying Solana at all. I'll be shorting the crap out of it. It's against Ethereum anyway. And put your stop loss above that wick there, and then woof, ride it all the way down. That is that. So definitely a long way from the bottom levels there, and a long way to drop for Solana versus Ethereum. And then it's back to Bitcoin on the monthly, as you can see, and it does look bullish on the monthly. I don't get you wrong there, but when you bring up the MACD indicator, as you can see, we have a high here. All right, you might see it better on the next chart. That's it. See it better on this one. Okay, so logarithmic. So you can sort of zoom out and see the Bitcoin over time. All right, so this here crossed. What happened? Bitcoin just crashed. This MACD, this big high level. We got a lower high in the MACD. So this was lower than this, as you can see, and it went higher. It shows you diminishing returns, really, momentum. And we crossed. And what happened? Bitcoin dropped heaps. We had this MACD again, and this was lower than this one. Okay, as you can see, these peaks get lower and lower and lower. And what happened? It crossed here. It was a little bit early. We did see a pump, and then it did correct a lot after that one. And now we're seeing it happen again. This time is obviously lower than this one, and this one. You can see it's going down, down, down. And it's not far from crossing. And I do see it's correcting after that happens. And not the end for Bitcoin. Okay, this is not the end of the bull run. This will probably cross and then come back up. Okay, it can happen as well. and take a little bit longer to play out. We have to wait and see for that one. And I'll just show you the SMI real quick and we'll end it there. So the SMI, which is this one. As you can see, the SMI, you had a bearish cross here, and after that happens, what happened? Price did drop a lot. There's a 2013 level. Had it again here in 2017. Marked the top, and we crossed, and we went raw. We smashed right down. So marked the top of this post-halving peak. And we had the post-halving peak, but before that one, we had this high here, which is quite similar to this one, and it did cross before it. Big drop, came up again. This did not cross back above. The blue line didn't go above the orange, so it stayed bearish. And boom, and obviously, boom, it dropped. And what happened? We crossed again. So we had a bearish cross, the SMI. I do see this resolving to the downside of the price, which I showed you on the tweet, which is this indicator here. And it's very, very good for that. So that is Bitcoin and the altcoins. Hope you enjoyed this video. Just going over some economic news. It's coming up. The Fed, so the FOMC minutes from last month, just going over what was discussed in that meeting. Comes out Thursday morning for me and a Wednesday arvo for the Americans. Also looked at the Fed's going to be speaking at Jackson Hole, Wyoming for the grand talk in this big auditorium, and quite interesting to see if they've seen the data. Is they're confident to start cutting rates. You know, they see weakness in the job market is really what they will be discussing mainly, and inflation targets. And then we looked at some Google Trends data, see the Bitcoin search trends over time, which don't look very pleasing. And a tweet by JT talking about the Bitcoin SMI indicator, which looks very, very bearish and very, very risk off. And it looks like it's going to drop a lot, but we'll see how that plays out. And he did some charting as well. So looked at the Bitcoin price after rate cuts and the bull market support band, seeing where that sort of tracks. And then, yeah, looked at Ethereum price and its wedge patterns, and it breaks down below the wedge after rate cuts and then comes down. In 2019 happens, and it sort of should play out the same as that, I believe. And yeah, looked at alt versus Bitcoin pairs, and then the SMI indicator to finish up. So if you enjoyed this video, please smash the like, comment your thoughts below, subscribe to stay updated. Be sure to check out the links below, and I'll catch you next one. Cheers.